morning. You're watching Businessworld Live. I'm Danny Laurel.
And I'm Jess De Los Santos. Here are the biggest stories to kickstart this trading day, Wednesday. The country's total COVID-19 caseload surpasses 3 million.
Even the PSE is not spared by the surge in infections. The local bourse will revert to half-day trading beginning Friday.
Bad loans held by banks continue to drop as of November 2021.
And a new consortium has been granted the original proponent status for the Sangli Airport project. We begin our broadcast with the Philippines reaching a grim milestone as COVID-19 infections breach the 3 million mark.
With cases continuing to soar, the pressure escalates further for the healthcare system. Marisol Halili with the rest of the story.
The country just breached another pandemic milestone. On Tuesday, total COVID infections topped 3 million as an additional 28,000 contracted the virus. Cases have been soaring to new heights since the year started, even reaching a high of 33,000. The health department did not mince words in describing the situation.
Ang ating bansa ay kasalukuyan nasa critical risk case classification na may pagtaas na 690%. Sa atin pong 7-day moving average of daily reported cases.
Health Secretary Francisco Duque laid down the grounds for declaring such. Two-week growth rate have skyrocketed more than 3,600%. Average daily attack rate climbed to 10.47%, while positivity rate is 40.4%. This as the Omicron variant has overtaken the Delta variant in the country's latest sequencing run.
So siya na po yung nag-dominate na variant, whereas before it was the Delta. So 60% of all the sequence runs ay Omicron na po.
But the Philippine Genome Center stopped short of calling it the dominant variant in the country. So far, 43 Omicron cases have been recorded in the country, 22 of which are international travelers.
Based on our data, USEC, marami pa ring Delta. We need to have further evidence po. So yun, USEC, ang ating DOH po gumagawa ng sampling sa different hospitals and institutions around the country so that malaman talaga natin yung situations.
As cases soar, the pressure escalates for the healthcare system, with more and more medical staff getting infected. The Department of Health decided to shorten isolation time for COVID-positive healthcare workers. The DOH says augmentation is ready if needed.
Ang reason naman na naging 5 days yan for the, especially for the asymptomatics, is because we believe that on the 5th day, you're vaccinated, the viral load is very low, and you are no longer you can no longer transmit the virus to, or you are not contagious. 93% even with booster.
Acting presidential spokesperson Carlo Nograles assures the public that the government is ready in case there is a need for a more restrictive alert level. The IATF is set to meet on Thursday to discuss alert level status and travel classification of different countries. For News 5, Marisol Halili, We Are One News.
The non-performing loan ratio of local banks dropped to an 8-month low of 4.35% in November of 2021. That is as the industry's asset quality continues to improve amid the recovery from the pandemic's impact. Latest BSP data showed the Npl ratio last November was the lowest since the 4.2% recorded in March of last year. Now recall that soured loans hit a 13-year high ratio in July and August of last year before steadily improving for the rest of the year. That's despite the reimposition of strict lockdowns during the Delta surge. Year to November, the industry's bad debt still accelerated by over 19%.
All right, Dan, the normal trading hour stint was short-lived, barely even a month since it started, and now we're back to pandemic hours on the bourse. What happened?
Well, indeed, I guess no surprises there, Jess. Stock trading set to move back to the half-day session starting January 14th. That's until the end of the month for now, amid, of course, the surge in the Omicron cases. So officially, it will start from 9 a.m. on the pre-open and then open at 9:30, and then we'll be closing by 1 p.m. Now, let's take a step back and look at our local bourse here and how we're opening, up by 0.8%. So not a bad deal here, considering we were already, trading lower yesterday, and there was quite some risks here. Analysts were saying that we might be dropping below 7,000 levels. It seems that despite all of these cases going on, we've been rather resilient. But what is, sad is that the investors that come from foreign countries have been exiting the bourse. So we've seen the fourth consecutive day of net foreign selling. We lost around 733 million pesos net on that. Now let's take a look at our banks here, especially on the back of that banner story that you just mentioned. On the one hand, from a year to date, 1 year basis, it's still, of course, souring in terms of the number of loans, but at least that seems to be going down. You can see the financials up by 0.9%. BDO, our biggest lender, leading the charge here, followed by UBP and Metro Bank. Now, interestingly, of course, COVID has now shut down 1 in every 5 bank branches, at least temporarily. This is according to BSP Governor Ben Diokno. He says that the ratio of the shutdowns in terms of physical branches is double for the small lenders. But he does say it's not a problem. We can do most transactions already digitally. There's no dysfunction when it comes to the delivery of services. I mean, just to reiterate, it's not just the banks here. Globe, around 3 dozen Globe Telecom stores are also temporarily closed. Now, I just wanted to take a quick peek at one specific commodity, and that is nickel. It's at 21,794. That has hit a 9-year high. I'm going to try and pull out the max chart for you so you can see how that has been going. And this is actually linked to the sales of electric vehicles. Basically, after Tesla has moved to secure future supplies from Talon Metals, and that has sent the metal index jumping. Let's take a quick peek at our mining and oil counter here on whether our nickel miners are doing pretty well. It does seem to be the case. Take a look at that. Nickel Asia up by 3.7%, and Oriental and Mark Ventures Global Ferronickel also enjoying quite some rallies here. Now, here to chat more about how to trade and tread these volatile markets, we have with us this morning Royce Aguilar of First Metro Securities. Hi, Royce, and welcome back.
Hello, everyone. Hello, Happy New Year.
Okay, Royce, let's kick off with the general levels of the local bourse here. Some were warning that with these surging cases, we might be dropping below 7,000 levels, at least in the short term. But now we're seeing quite, the difficult. We've been able to digest that this is not going away anytime soon. The positivity rate is just, way above 40% already. And yet we've been resilient, and yet we are still seeing, above 7,000 levels. What's going on here? What's in the mind of investors?
I think I think right now, I think investors are still digesting it. If you take a look at the volume is not that high, meaning there's still some risk of sentiment. But for us, for investors, really time to continue buying the dips. I mean, definitely there's still a risk that the country, or at least Metro Manila, will be under alert level 4. But in terms of valuations of the PSA, it's already significantly cheap compared to peers. So I think we are open to the possibility that the market can pull back, but it's just an opportunity for long-term investors to really take advantage. Especially, we saw how we survived the first wave of the COVID variant. We saw how we survived the Delta, and I think Omicron being less severe and with our higher vaccination rates, I think we can survive that. And for us, for investors, it's really time to look at it on a long-term point of view.
We see the momentum going towards buying here, at least when you look at the MACD. Tell us, have you or have investors priced in the alert level 4 as imminent?
Not not fully, because I think if we are under it, before the market can further pull back below 7,000, because that's how sentiment works. But in terms of valuations, I think a lot of the risks have been priced in already. So I think right now, like I've said earlier, the volume is still not that high. So even if the market went up, so far this week, it's the volume is not there. Meaning, while there may be buying, it's not enough to really sustain the momentum of the market.
Is there some sort of floor bottom, especially since you mentioned we've seen it already in the first wave, we've seen it in Delta. Can we actually say that there's a support level at a certain PE ratio or at a certain level psychologically that we will not go below those levels even if we do go back to a lockdown?
Well, that's hard to determine because it will be dependent on cases. Because, right, of course, experts are saying we may peak at 40K, but what if it don't peak at 40K? And what if it doesn't stop at alert level 4? So it will be highly dependent on that. So, but nevertheless, in terms of valuations for us, around 16 times PE in terms of forward PE, which we are seeing right now, that usually the bottom of the market, and the expensive is if we hit 22 times, which we are significantly far off. So right now we're near 16. So that tells us that the upside is higher compared to the downside. And like I've said, the downside is can still happen, but it's in terms of risk to reward, it's something that's favorable for investors out there.
Okay, you mentioned to buy on the dips. Which ones are you gonna buy? Will it still be the lockdown stocks, or are you already looking at reopening stocks?
We're definitely looking at our reopening stocks. A lot of corporates that we talk to are already positive, already more prepared than before.
Hmm.
So moving forward, especially how we saw the strong rebound past couple of months prior to Omicron, that there was a strong rebound since we talked to corporate. So we expect that to resume once we reopen. And of course, we're hoping it will happen
Mm.
sometime in Feb and March once the cases do peak. So
Okay, so reopening stocks there. Royce, what about the banks? We've seen, in our banner here, some positive news there in terms of the lowering on, SARD loans. But does this spell something more significant, like fundamental for the recovery of the economy? Is that clear to you, or is it actually just perhaps a lag effect of some policies?
well, in terms of the banks, well, they've lagged because they're really the definition of reopening. And since we're not seeing that for, significant opening yet, that's why the banks have lagged. But actually, financials are one of our sector picks. So we're really looking forward for that sector to outperform, especially since we expect further reopening. And you guys mentioned earlier that the NPL ratios have improved. So that's one data that we're really that's a positive development for the sector. So something to take into consideration for investors who doesn't have yet exposure in the sector.
Are you not worried about the bad loans increasing if there might be a lockdown again? Or have the banks already set aside enough?
Well, yes, the banks have already set aside enough. If you take a look at how they provision after the peak of the lockdowns in the prior year, they've already provided enough cushion. And like I've said, the corporates have been more prepared now compared to before. So we are expecting just a minor effect, or at least a less severe effect compared to the previous level 4 or 5 ECQ type of lockdowns that we experienced before.
Okay, let's talk about global issues here. A lot are watching the US inflation coming out. Some are expecting that to
Yeah.
be 7%. And of course, that would trigger, tightening in the Fed. How would this affect our local markets, especially when it comes to, foreign buying, which has been at least basically an exodus in the past 4 days?
Yeah. That's an interesting question because if you take a look at if I'm a global investor and I want to invest in equities and I'm seeing higher rates in the US, it means the bonds will tend to outperform in that area. So where will I have returns? I will look at emerging markets where there's still a prospect of further reopening and rates are yet to increase because they're just at the beginning of the reopening. And one emerging market that has yet to reopen is Philippines. So that's one scenario where investors can take a look at because the market has not yet gone up. If you think about the performance, actually we're just
Hmm.
technically flat. And because
Okay.
we have not yet significantly open, but like I've said, we talk to corporates, and they're really prepared, and they're just waiting for the actual opening. So I think foreign investors will take a look at that. And in historically, foreign investors have a low exposure to Philippines, so the upside is definitely there. They're just waiting for catalyst, and definitely that's the reopening.
What would happen if the BSP does hike rates? Would that, how would that move the markets?
I think in terms of how much. For us, actually, for the rest of the year, for the whole 2022, if they raise by 25 whips, it's just fine. But we
Okay.
do expect that to be at the latter part of the year. So that's going to be some surprise if it happens at the start of the year or the first half of the year. But they already telegraphed that they won't. So the second half of the year is, if they do, because of probably rising inflation, because of the return of demand, because of the expected reopening. So that's fine, because that's what happened in the US. But for us, it's going to be a slower pace of increase, which if it happens in the second half, it's fine.
Okay, so not a lot of volatility if, of course, it happens in a gradual way, as they have
Correct.
been reiterating it would. Thank you so much for those insights, Royce Aguilar of First Metro Securities.
Thank you, everyone.
Here are the other points we're keeping our eyes on. BSP Governor Ben Jokno says it is unlikely for the Banco Central to increase policy rates in the first half of the year. Jokno said they will first wait for the performance of the first two quarters of 2022 before making any adjustments. He added that the BSP wants to see 4 to 6 quarters of steady economic growth and unemployment around 5% before considering raising rates. The key interest rate has been at a record low 2% for more than a year, withstanding mounting inflation in 2021.
The Finance Department and NEDA have ruled out granting local governments the power to organize their own special economic zones. Now, the push for more economic zones in areas like Cebu, Mindoro, Bohol, and Ilocos Sur has gathered momentum in the wake of the Supreme Court's Mandanas ruling, which allocated a greater share of the national taxes to LGUs. But speaking before the Senate Committee on Economic Affairs, Finance Assistant Secretary Valerie Brion says they object to this proposal, noting uncertainties in the ability of badly organized zones to create jobs and generate economic benefits. NEDA Undersecretary Mercedita Sombilia, meanwhile, said the Economic Planning Agency concurs with the DOF, but is willing to work with the Senate Economic Affairs Committee to find middle ground. Sombilia noted, however, that many economic zones did not generate much income for their communities, citing DOF data. Committee Chairperson Senator Amy Marcos said the economic managers' positions would seem to suggest that, quote, local executives have no capacity whatsoever to exert or to promulgate programs that will create economic success.
A new consortium has been granted original proponent status for the Sangli Airport project. The SPIA Development Consortium said Cavite Governor John Vic Remulla issued the certificate of acceptance to them on January 7. The SPIA Consortium is composed of Philippine developers and investors as well as global firms. Cavitex Holdings and the Yuchenko Group are the local lead members for the consortium. Recall that the Cavite province had previously declared a second failed bidding after no bids came in following the October 20 deadline.
And the ADB has approved a $225,000 grant, that's roughly 11.4 million pesos, to the Philippine government for the creation of an economic growth strategy that will help reach its target of becoming a high-income country in 2 decades. The ADB says the technical assistance will support the finance department in crafting a growth blueprint that will guide the necessary structural reforms to lift potential growth and create skilled jobs. The multilateral lender says this strategy will also identify new sources of sustained growth amid the socioeconomic impact of the COVID-19 pandemic. Project outputs include an economic complexity analysis and services for the country's long-term growth strategy.
Coming right up, as COVID-19 cases continue to rise, the government moves to limit the purchases of fever and flu medicines.
More of that and other stories when Business World Live returns. Stay with us.
Good morning. You're still watching Business World Live. I'm Jess De Los Santos.
And I'm Danny Laurel. More Filipinos are opting to self regulate and stay indoors. That's as COVID-19 cases spike.
Now, how is this affecting business owners and transport drivers? Let's get the answers in this report by Jenny Dong.
Lines are long at this terminal in Philcoa, Quezon City, not of passengers but of jeepneys. It's been a dry spell for the likes of Mang Ernesto since cases started to spike in NCR. This is a far cry from the peak of activity in December, when Ernesto would already have his boundary set aside as early as 8 in the morning. Now, his jeep has been waiting in line for more than 2 hours.
Pag hindi naman kami pumila, wala naman kung may sasakay. Eh paano yung krudo? Napakamahal ng krudo.
Mang Ernesto has observed that fewer people are coming out due to the COVID-19 spike and stricter restrictions for the unvaccinated. This is the same scenario for small businesses like this Carinderia in Mandaluyong. Nani said they'd been lucky to even have 20 customers in a day.
Hindi siya katulad ng December na tuloy-tuloy po yung customer namin, halos wala kaming pahinga. Pagpasok ng January, as in ang hina po, sobrang hina.
Such is also the case in malls where foot traffic has visibly gone down. Even vehicular traffic is now lighter in major thoroughfares such as Commonwealth and EDSA. Over at the MRT Line 3, ridership has lessened from a daily average of 200,000 that has dropped to 140,000. For the health department, this is a welcome sign that people are self-regulating.
Pag tinignan po natin ngayon, pami-pamilya, hindi na lumalabas ng bahay, pami-pamilya nag-isolate sa establishments, are closing for 2 to 3 days just to disinfect. Everybody's helping in this regard.
The MRT3 management is doing their part. They have started random COVID-19 antigen testing among passengers who consent to the swabbing. Among 48 who got tested on Tuesday, 6 came out positive.
Sinasabi natin na mag-isolate sila, mag-report po sa LGU nila, and also option for possible confirmatory test sa RT-PCR.
Amid the COVID-19 surge in NCR, Kapati assures the public that MRT operations would not be affected. For News 5, Jenny Dongon, We Are One News.
Meanwhile, Octa Research Fellow Guido David says Metro Manila is now on a severe COVID-19 outbreak. David said that while the reproduction number in the region has slightly dropped to 5.22, the daily attack rate in NCR is now at 89. Because of this, the expert believes that healthcare utilization rate in the metro will likely exceed 70% by next week. However, David also insisted that the drop in reproduction number is a good sign that the region is nearing its peak in cases.
The DTI and DOH have set a purchase limit on basic medicines to try to give more Filipinos access to them. That's as COVID-19 cases continue to rise. A recent joint memorandum circular urges the retailers to limit sales of 500 milligram tablets of paracetamol to 20 per person or at 60 per household. Now, other basic medicines like carbocysteine capsules also have the same purchase limits. The departments say people and establishments found violating the circular will be held liable under the Price Act, Consumer Act of the Philippines, and other laws.
The health department is considering giving priority testing for COVID-19 to groups that need it more. Mon Gualvez with the story.
It was a 2-hour wait for motorists at this diagnostic laboratory in Pasay City. Even walk-ins wanting to get tested had to wait for hours. According to the laboratory, they even have converted the vaccination site into a testing center just to accommodate the influx of those wanting to get swabbed. But with the high demand comes the delays in releasing results.
The lab is functioning normally, and then it's just more of pushing out the results from the initial influx that happened during the start of the surge.
For DOH, the sudden onslaught of people wanting to get tested for COVID-19 isn't new. It's just that right now, the huge chunk of manpower of the testing laboratories at the moment have been tested positive for COVID-19.
For this testing laboratory in Manila, this means servicing only those with appointments.
So far na-manage naman natin. From time to time, ang gate namin open and close. May mga clients na gustong-gusto magpa-test. As much as we want to, hindi talaga natin sila kayang i-accommodate.
The laboratory said it is also prioritizing OFWs, those in vulnerable sector, and those already experiencing symptoms. They also don't do express results for the meantime.
We tried na ibigay sa kanila as fast as we could. Pero syempre, we can only give so much din, di ba? Kasi nga limited ang manpower natin.
Speaking on the chiefs, Health Undersecretary Maria Rosario Vergeres said that they are considering a prioritized COVID testing policy amid the increasing demand.
Ang testing dapat, clinical management, i-prioritize natin yung mga vulnerable natin, senior citizens, those with comorbidities, Yung mga immunocompromised are healthcare workers.
Should this be approved, Vergeres says those not in the priority list to isolate immediately to prevent spreading the virus. For News 5, Mon Gualvez, we are One News.
And that's a first look into the business day this Wednesday, January 12, 2022. I'm Jess De Los Santos.
And I'm Danny Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.